Good morning. This is your Clubhouse Insider Market Update for Monday, September 15th, 2025. So it is Fed week. There are growing expectations that the Fed will cut interest rates this week by 25 basis points. The meeting is on Wednesday. So there are some out there that are saying maybe a little bit more than that. We will see. But all eyes are on inflation readings and Tuesday's retail sales report. These will help pretty much set the tone for the Fed's policy guidance. And of course, the Fed chair, Jerome Powell, he makes a speech after the announcement. So his remarks on Wednesday could reshape expectations for cuts throughout the rest of the year. So let's take a look at the markets here. The average, well, so first of all, let's start with the Treasury. So we've been talking about this Treasury for weeks and weeks here. If we could see a 3 on here, a lot of people are going to be really happy. So we're getting dangerously close, which is great. Beginning of the year, all the experts, I like to put quotes in experts, but all of their expectations were that rates by the end of the year would come down to about the 6% range. And we're really moving that way. So some of them may be proven correct here, but if this could be under 3, then maybe we could start seeing some conventionals with a 5 on it and things like that. So, but anyway, it's down 11% for the year. So that's great for mortgages. Now, mortgage rates, you can see here, steady just from August 1st. This is when all the slide has really started happening. So we're doing really great. Big dip here recently with that jobs report, and here we are. And this is pretty much already set the rate cut, priced it into the market. You can see here, it's about 0.25%. So the market likes to price things in early. So do not, be surprised if the markets don't react and this huge giant news and rates just bottom out because of a Fed cut announcement. And the Fed cut is the federal funds rate, not actual mortgage rates. So, we could start seeing just finding a new level after all this stuff has already been priced in for the rate cut that's coming, hopefully. All but guaranteed at this point is what people are saying. So, 30-year fixed mortgage, we're well under 6.5, getting closer to 6.25 here. So again, these are averages. So don't be shocked if you call and get a quote for 6.3 or 6.5, depending on your credit, depending on how much money you're putting down. These are going to be perfect scenarios when they come up with these averages. So, but look at here, 15 years, they're down in the 5s. Okay, FHA and VA are basically in the 5s, really, really close. 5.99, stuff like that is really showing up on rate sheets for super low cost. So hang in there. If you are looking to refinance, it's really, really important to stay in touch with somebody that's going to be able to help you through this all. So basically, to sum it up, optimism is really high. There is risk, however. So investors seemed primed for easing here through the markets, but any signal at all that the Fed could pull back will likely spark volatility. So stay tuned. It will all happen very quickly. So make sure you take advantage. This is a dip. They like to say buy the dip. So bottom line, mortgage rates are easing, which is great news, but home costs, supply constraints, there's still hurdles out there. So if you're considering buying or refinancing, acting sooner may lock in better terms. Take advantage of what the market is giving. If you're looking to refinance, let us help you come up with a plan, implement that plan with what we call a strike rate, and then when the time comes, act on that plan to set you up for success. Timing in the market, or just timing the market in general, in comparing yourself to someone else's situation, financially or otherwise, can be really tricky. So it can end up actually costing you money. Remember that real estate is a long game. So don't get caught up in all the fun of speculation, and send me a message to help you put in a strategy in motion. Let's set the strategy in motion. So have a great week, everybody.